All right, you guys, come on in. It's pretty crazy action. I hope you're having fun. I'm enjoying this stuff. Oh, we're pushing the low yet again. Let's see if it takes out this one more time. It just keeps doing it. It's great short, great long. You can kind of play both ways. I'm going to nibble long right here just for fun. Grab a quick move back to 50. Okay, so we have a big move going here. And it's not over yet. This is going to be a lot of opportunity going into the close. So fasten your seatbelts. Um, I've had, put it this way, I've had a five-figure day. I don't know about you, but that's that's pretty nice. But I think we can do some more. So I'll wait a few minutes because people have drifted in a little late before, and then we'll do a little bit of context here. But it's been quite a day. Still has a downside bias, although again, short squeezes have been coming as well, which we didn't see earlier. So, all right, I'm gonna wait till 30 more seconds and then we'll go through context and we'll talk about what's going on here. 50 is still in play. It's trying to hold this spot. You could scalp long here. But again, just for bounce to the next quarter number, which would be to 52 and a half. And we could definitely get going to the downside again, but we're starting to get to the close. So there should be more and more short squeezes as we get toward the close. So let's get this first one off here and then see if we can get a little bit of a runner going again. There we go. Maybe up to there. We'll protect it. And nope. Okay. Not yet. Still sloping down here, and we're still attacking the bid pretty hard. But all right, let's couple more people in. I'm going to make a few of you co-hosts. Please, those of you that are co-hosts, please keep an eye on the waiting room if you can. And if you see someone there, let them in. There's Cal, for example. And just wait till these last couple of people are on board. I'll make a few of you guys co-hosts. And that should be administration. I don't think JVC will be joining us today. All right, we have a great day going. I've been posting in the pit. Um, First of all, let's talk statistics. Trend days are really unusual. I've said this before. Everyone always says, what do you mean? It's really unusual that the market will go one way all day in the futures market. It's rare. It's less than 15% of days. Go back and look. And it also sets up really good closes because there's a reasonable number of people that are playing short, which is the side you remember I said yesterday and in other sessions, you can always play an inflection point both ways, but there's always one side that's easier than the other. Well, today it's been much easier to play short than long, obviously. But there's been, good trades both sides. As I said at the beginning, I'm having a nice little five-figure day, so I'm not complaining. And let's look at it. We're riding SD2 down. The VWAP is sloping down, so the SD2 level isn't very extreme. We have a decent downtrend going, but it's slowing down in its velocity. Keep that in mind. We have really good volume, almost 2 million contracts traded in ES. We're down almost 2% in ES and YM. We're down almost 4% in RTY and 3% in NQ. These are significant trend moves that, like I said, this is an unusual day to get this. So obviously you wanted to be short and you wanted to short the bounces, which was real easy to do today. I mean, it's just It's been an epic move down that's been really predictable. And look where we are. We've talked about this range all week. All we did was poke out of the range and test the bottom of the previous range. And then in one day, we're back at the low end of the range. And NQ looks exactly, or excuse me, ES, that was NQ. ES looks exactly the same. So that's the context. Um, let's get a few more details. How about what's going on in the equities? We opened fairly strong. And again, I've told you this over and over again these 2 weeks. When you see this advanced decline open strong and get weaker, that's a sign of a weak market. It's been doing that almost every day. So this was, again, along with the 15-minute break, which was just an epic place to get short. Um, Today was almost a perfect day. Look at this. Here's the 15-minute low. You think that was a good spot for a short, but actually if you traded it properly, the short was the other end. It was a weak break at the high. And I don't know if you noticed that, but that was my first short, and I was like, "Whoa, that worked!" It was crazy fast off of the first 15-minute break. And let's go up and look at it. I'm scrolling up there so I can show it to you. It's way up here. And see, it's right there. We broke by 4 ticks. See what I mean? That's what a weak break looks like on a strong day down. Wow. So that was crazy. Um, and it was a perfect signal for how to play this. Now it's getting trickier because we've bounced a little bit down here. You can see we've traded into some fairly significant liquidity finally. But the equities are still net pretty negative. There's a couple of things up. Now Nvidia's down again, Tesla's down, Meta's up, So from a futures point of view, NQ had a lot more velocity, but it bounced a lot more. And so I just stayed mostly in ES. And the numbers I was talking about came from ES trades. So it's been a really good day. Now, couple of things. Let's look at the cumulative delta. It's not as extreme to the negative as it could be on a big down day like this. It's only at like minus 30,000. And and the reason is we've ebb and flowed a little bit at the low here. We're still probably going to see short squeezes, but probably not just short squeezes. Let me phrase it that way. Like, for example, if you're looking at a 30-minute rotation, we have unfinished business at the low and a price rejector at the high and a price rejector on the pullback high. So, this is a structural short still. At some point, there's going to be covering of those structural shorts. That's my point. So, by the way, I did speak to Lee. He's going to come tomorrow and talk about his upcoming structural trading M period class which is right now, or excuse me, top of the hour. He's got some really good statistics for M period continuations. So we're going to keep that in mind today. There's a real strong likelihood on a trend day that M period will make a new lower low. That's the point. That's the statistic right now. And if you look at the unfinished business and the price rejector on the 30-minute rotation, it's likely. So you could theoretically trade inside out from here, particularly if you get at the edge of the range, like maybe right here. So this is an interesting thing to try. Let's try it. I'm going to switch accounts here for a minute. I've been doing a bunch of different accounts. In this one, we can go pretty big. So here's the liquidity right here. So let's see how hard it is to get filled up there and say 87 and a half. Well, I'm short 84 and a half, or excuse me, 54 quarter. So 55 is the quarter number I'm on. And it's already kind of teasing that it's working, the top of the short-term range. So this was kind of a play all the way to the low for M period, which starts in about 20 minutes. So interesting idea. Let's see how scaled we can make it. Lee will talk a lot more about this tomorrow, but today it just might be that we got a really good example of it, so I figure I'll show it to you. So I'm short 3 now, 55 quarter. That's the quarter number, but that's what I really wanted to happen, a sweep up like that gets my other entries that I'm trying limit orders, trying to limit myself in, and then I want to start taking a little profit here if I can, so I can get on the other side of it between me and the liquidity. And that's how I could manage a decent shorts position here for that idea. So let's keep trying to work where the liquidity is, but see, they're working this high volume node and it's been quite volatile. So you got to be prepared to get off sides a bit if you're going to do this. So let's stay with the idea though. Again, short squeezes are what makes this really risky at the close, but Lee's got good statistics that he will share with you. But let's see if we can get on the other side of these 8 with 4 short that are profitable. So right now I've got 9, now 10. Okay, now let's buy some of them back right here, try to protect the rest. Okay, well, I bought 8 of them back profitably, but we're still kind of on an inflection point. So let's keep these 2 short at 57, and we'll try to scale maybe up here around 60. But again, being short's dangerous because of the closing short squeezes, but there's a good argument that it will make a lower low before we get a lot of, well, before the close, not necessarily before a short squeeze, and that's the problem. So again, we're doing much more advanced stuff here. I'm going to protect one more of these contracts here. There it goes, 57 short, we're at 53. Let's protect 55 with one of these. Try to keep one short. We have a 400, now a $500 profit locked in. I'm going to protect at 54 as soon as I can on that one. Still leaving the other one in play if we get hit with our protective stop. Now we're protecting 53. Now we'll protect the 52.5 quarter number. It's probably going to bounce here if it's going to bounce. Otherwise, we could take the low out as planned, which would be ideal with both of these, but I don't want to give this big chunk of profit back. So I'm keeping one of them and we'll try to reshort 55 there maybe. Okay, that one filled. So now I've got the last one. Let's see what we can do with it. I don't want to give all this back, so I'm going to protect this one too. But I'll do it. You know what? Let's do it at 55, just under that liquidity. But that's a long way away, so I might not let it get that far. I'd really rather get more short, but it's too hard to find out a good spot. Maybe there. But we're doing that. This is almost $1,000 trade now, in case you weren't paying attention. Let's protect a little more of it. There we go. How about 700 at 51? And the low's going to go. I want to keep this profit. So, I might not get a chance to go with it, but again, it's a really good likelihood that this will sometime in M period, between now and M through M period. So like the top of the hour to the bottom of the next hour, it's likely. And again, I will defer to Lee on what those statistics actually are, but he and I were talking about them yesterday and the day before. And let's see if we can get short again here. Okay, really want to do it much further up, but that was fun, and I'm going to try to reshort it. As long as it's really a better spot. Watch the range up at 58, but it still wants to attack the low. See, so we'll protect this again and see if it can take out that low and clean up the unfinished business down there. So we're trading toward that structural weakness is what we're doing, as opposed to my pure price action. Although this is also joining momentum. So David, this is an example of joining momentum you asked me about yesterday. I'm doing it today just to show it to you. There we go. Okay, so it took out, it didn't quite get the low. It's close. Let's see if there it goes. Now it got it. Let's see if it cleans this low up. The unfinished business is gone. It's still not a very strong bottom though, but it is 187 by 0. See, there's nothing on the ask. So that cleans up the bad structure for the moment. Let's cancel all these other orders. And that could be the low of the day right there, but it's still likely again in M period to go lower. That's the stat that Lee's going to talk about. So let's see, you join in on an IP in this? Both. David, go back and review what I was doing there. This was the spot to do it, but I didn't really get as big a position, and I took profit on the way down, and so it's still probably going to go. But further away the better. That gives you more room to protect your profit. So it's all about managing the trade and your tactics going in and out. There's no right answer to that. There's just doing it well and not doing it well, and you get to doing it well by practicing not doing it well. I hate to put it that way, but it's kind of that simple. but you got to pay attention to what you're doing wrong and how to improve it. Remember, when you're trading, there's a thing we love to talk about the book Thinking in Bets, and Annie Duke's book. And it's a great book about this style of thinking. And basically, you're managing risk around the odds of your trades, and that's all that matters. And what new traders do, and even people that are on the learning curve somewhere, they're constantly looking at their profits and they're judging how they're doing by their profits, and that's the wrong way to do it. The right way to do it is to judge how you're doing by progress. Are you making progress? So the first thing to make progress happen is to identify what it is that you're doing right and wrong. And so this is a really good topic for this class. um, this stuff's real easy to trade if you don't overthink it. There's good momentum down. Joining it at an inflection point that's the intersection of liquidity and quarter numbers gives you the risk management you need to be able to join it because it's so volatile. But here we go. The low's going again. So if you are resulting, if you are looking at your performance based on the results, you're always going to be screwed up because a really good trader can make a living with less than 50% winners. And some traders have really high winning averages like me. And that's a different style. And you have to develop that, but you have to understand that you have an edge and you have risk management, and that's it. And it's all about executing your edge against the risk management that's appropriate for that account size. So if you can join an inflection point for joining momentum, or if you can join an inflection point for fading momentum, it's always the right place to do it. Like right now, we have top of the range. This could be a great place to play long, but this low still wants to go lower. Let's try a long. Why not? It's odd. It's profitable already. Where's it likely to go? It's probably going to get up here to at least 50. But again, we don't know if the sellers might really, really reassert themselves. The extremes are much lower down. That doesn't mean I can't nibble a little bit here if I watch the trade and see what's going on. The sellers aren't that aggressive here. They've kind of taken their foot off the gas. So that's a perfect place to scalp for ticks. And as we push lower, I could maybe get a little more. But the easy direction today has been down, joining momentum, not fading it like I'm doing right now. But again, you can do both ways as long as you understand the nature of an inflection point. Let's protect this. This could be, again, the entry of the year if we go back to the VWAP, which is 60 points above us. And sooner or later, there's going to be, a move toward value because we're pushing value down. That's what's going on. Let's protect 50 here, and we'll see if we can stay above 50. Big fat half a whole number. I've got another $250 trade going. I could protect it tighter. It's trading to the quarter number. It's probably coming back down. There it goes. See, David, right to the edge of the range, overshot it a little bit, and then the seller said, okay, that's a good spot. We'll sell there, and there they are. So it's about reading what's going on and not having a pre-existing idea of what's going on. So I just did both ways. The long is much riskier, and these are better shorts as long as it keeps having good momentum down. That's why playing up here short was a better idea a little while ago. We could still try to play this area short, but again, if it doesn't reassert there and you get off sides, what's the problem with that going into the close when we could see short squeezes? Well, problem with that is that the VWAP is all the way the F up here. Let's see where it is. There it is. Okay, at 17 almost. So you really have to think that the market can go both ways and manage trading that, not it's going down only or it's going up only. It's doing both. Which can you execute against right now? That's the whole thing to be focused on. So that's what I was showing you guys yesterday, a way with a lot of scale to exercise that at any inflection point, and you can implement it either way. We did that yesterday. I'm going to try to do it today. I want to try to play long more than short just because of the potential, but there's some decent shorts, up there at about 51. I'm long 48, so back to 50 is a decent little long here. Let's see if we can scale it a little bit. It's already working, so I'm kind of trading into a winner. Maybe Another one gets up there. So I've got 3. There's a high volume node to target. Let's see if it takes out 50 again, then the next quarter number down would be 45. So we could play more aggressively as it comes into this liquidity around 45. So we could park some buys down there. We could get one of these off up here. Now we have 3 again, protect a couple of those, take the target off. So now we have 1 left and we get a nice 47 entry, protected at 48. We'll see what happens. Maybe we'll get a runner, maybe not. Maybe it'll get hit. I don't know. It's not up to me. It's up to the market. Now it's trading 49. Now it's trading 50. Let's protect 49. Now it's trading 51. Let's protect 50. That's a 3-point winner on this last contract. If we get a short squeeze, I'm going to be in, this is going to be a $2,000 trade. Here we go. That's why you want to play long, not short if you can. It's just a better like that. Okay. So that was a decent example of what I was showing you yesterday with a real extreme day and considering both the risk of being long and the opportunity being long and short back to back. So I couldn't give you a better explanation, everybody, and David and all the other folks. I couldn't give you a better explanation than what I just did. That is literally the crux of it right there. Look at the fast LRCs, the 5 seconds here. We're horizontal. We're working a range, and the opportunity is definitely to the upside, because you can see the bottom. A short squeeze could go anywhere. We could go all the way back to the other end of the range. Look at the range today, guys. When you have a range this big and you're not making money, something is seriously wrong. Because you can join momentum in a range and you can fade momentum in a range, and sometimes you can do both well if you're so inclined. And today is a really good example of that. This was much easier to trade short, as I was just showing you, but longs were definitely doable. And RTY has a 100-point range. NQ has an 850-point range. ES has a 156-point range. That's 624 ticks. YM 1,000 points. So this is insane amounts of movement, and it's not even a big percent, 3%, almost 4% now in RTY. Again, a big trend day. We don't even get to limits until we get above 5. So, we could go again as far as we've gone between now and the close. That could happen. You have to think that way. But you'll see it happening. If it is, just don't marry price levels, marry the order flow, marry the price action and what the market's telling you, like I just showed you in that trade. I don't have an opinion. It's the market's opinion. I'm placing my orders to take advantage of the behavior that I'm watching. And then the market decides whether I'm going to make money or not. That's all there is to it. Okay, so questions, comments, put them in the chat. You can also unmute if you like. Meanwhile, we'll see what this does. We're trading liquidity at the lows, going into the close on a big down day with a fairly big negative delta, cumulative delta, but not a huge cumulative negative delta. So, and percentage-wise, we're down a respectable downtrend, but it's not a huge day, particularly considering some of the moves we've had. However, it sure cleans up the structure. We cleaned up. Remember, my morning session today, I was talking about all this poor structure below us, these single prints. Look at this. We got every single one of them cleaned up from the previous overnight and the previous day. And now we're attacking some older ones much lower down. And that's basically the next range down. And that's a completely different ball game if this range goes. So that's also important. There's an air pocket down at least to 5,250, if not 5,000. So you really have to think broadly when the market's moving like this. We're just kind of working around between SD2 and SD1, -1, -1 and -2. So it's really not even extreme. And again, that's because the VWAP is sloped down, because there's more volume at the lows than anywhere else. So there's the picture. It's becoming a much, much weaker downtrend than it was earlier. So it's also going into the close, and there's a cumulative delta that's negative. So short squeezes, it's ripe for short squeezes. This is the second one from the left is ES. The VWAP for Globex is at 55.24. We're trading at 54.47. That setup alone right there, that's one of my favorites. I call this half the distance to the goal line. It's an extreme setup, so it's a subset of the extreme setup I've been teaching you. If we're that far from the VWAP between now and sometime in the early settlement, we're really likely, not for sure, but we're like 98, 99% likely to head at least halfway back to the VWAP. That's the statistic I play. So if the VWAP is that far away, what's roughly half? And you can use RTH as well. That was the Globex. But with RTH, the VWAP is at 24. So that's a little bit more conservative. And we're at 47. So what's halfway back to that? Well, let's see. Let's call it 50 and 25 to make it easy. So 75 points. So if we got anywhere back in the 30s, so where would that put us? That would put us around 80, which is only the last place we broke down from. And it's where SD1 is. So that's really likely that we're going to get somewhere up around 80 at least. So there's your statistic, but that's between now and right after the close. And we have earnings coming just to make it more interesting, and it's in big tech. So, I mean, if you wanted an environment that had all kinds of potential possibilities here, we could double and end up down 6%, or we could go back and end up, almost flat, or we could do both. So fasten your seatbelt, trade what's happening, don't have an opinion, let the market give you your opinion. Yeah, but it doesn't, Chris. That's the thing. The market can not turn around longer than you can hold on to trying to fade it. That's why you fade opportunistically. You buy turnarounds opportunistically. But that's why I showed you guys this 5-second LRC view, because it gives you an unequivocal statistical answer to, are we still going down? The answer is no. We're in ebb and flow. That's the price action at the low. Ebb and flow is what's typical in markets, back and forth. If we're high momentum in one direction, which we were earlier, that's unusual. Ebb and flow is normal. And then price discovery is when we're going back and forth in a big giant range a lot. And today's had a lot of price discovery on the way down. But right now we're in an orderly auction of ebb and flow at the low. And that's a very dangerous spot to be short. But you don't automatically belong there. You let that range. The beauty of the statistics this way, using regression this way, is that it's not the high and the low. It's not a channel. It's a statistical representation using linear regression of the best fit of this price action for this period of time. So it's totally unbiased, and that's why I love regression for that purpose. And right now we're attacking the high end of the range aggressively, and then we go right back into the middle of it, which kind of reinforces the idea that it's kind of percolating down here, but we cleaned up the low enough that it's not obvious that it's going to go down there again and take it out, other than, maybe. And so why try to predict it? Just let it do it and play what it's doing. Trade what's happening. Okay, so I'm gonna avoid NQ today just because tech is so much of this, and I was, if you were at the opening session, I tried to trade a little bit in MNQ and NQ. And even though the opportunities were good, it just isn't trading around liquidity very well. See, the liquidity is all spread out and harder to read. So the liquidity is much more helpful in ES under these conditions. So that's why I'm playing over here. I'm going to get it long again right here because we're starting to get busy right going into M period. And so if we can take this low out, this will be a perfect opportunity for a long. So I'm going to kind of start putting one on and see if I can build a position down here somewhere. Meanwhile, that's kind of 55 area is kind of the area that I expect it to go up to find sellers, at least on this first squeeze like that. There it goes. So I may take profit there, or I may try to let it run. I'm going to try to get more contracts on here. And then we can play it. By the way, again, don't try to mimic what I'm doing. Watch what I'm doing and listen to what I'm saying about the technique. That's really important. You can practice it on your own time. Okay, we need one more right here. Good, we got it. Okay, now we can take one off at 50 and protect the other one, which is what I wanted to be able to do. See how that works? That's technique. Okay, now I've got a really nice protected long with no risk. That's what you want to do. And now if we get a short squeeze, I'm golden. If not, I'll take profit like that. So you couldn't ask for better examples. Again, I'm trading the 47.5 quarter number. That's where the liquidity is parked right now. So let's see how hard it is to get long down there. And then if it goes through there, the 45 is the next one up. So we got on a sweep down, we got long one. Look at that. That's pretty cool because it's already profitable. So maybe put another order in there. Again, I try to get the stack under it so I can kind of build a position that's working. And with this much movement, it's a little tricky, but you can kind of see it working as I'm doing it. So we'll maybe go up to 10 or 15 contracts here. These are minis, so that's ambitious, but it's a good place to be doing it. There we go. Let's protect this one. Now we're long 48.75. It's at 50.75. I'm going to protect 57. No, I'm not. I'm going to protect 50. 50 and a half, 50.75 protected. Okay, now 51.75 protected. Here's a short squeeze. Okay, baby. We're long 48.75. It's trading 52.75 and we got filled. Oh. So this is the methodology that I was explaining yesterday that I wanted you guys to see. You've now seen like, what, 5 good examples in a row of how to do it. So again, the midterm is coming. Actually, the final exam's tomorrow, isn't it? So what questions or comments do you have? The big question I always get is, how do I do that? You practice. It's just that simple. This isn't hard to understand if you go back and watch the video a few times. And by the way, we do have a price rejector now on the bottom of the 30-minute rotation here of M period. So that's kind of a perfect place to get long. And the low isn't really good, but at least there's a price rejector on this rotation, the market profile rotations. And again, Lee's going to stop in tomorrow and talk a little bit about his approach to that. Oh, and one other thing I want to mention. Tomorrow, I was real sloppy last week. Tomorrow, Friday, there's a TRG session, a normally scheduled session that's at 12 o'clock. And if you're in this class, what we're going to do, since you're all here and you can hear this, just use that link, the normal link. I'm going to open the room for that normal TRG class for everybody, not just the people in the closing class, but all of TRG. We will open at 11:30 tomorrow, and we'll go a little longer than usual. That'll be the wrap up of the closing class, and it'll be the normal Friday TRG closing session. And we will have a special guest appearance by Lee to talk about his structural approach with this M period setup. So all that will happen tomorrow, starting at 11:30 my time, a half an hour before it is on the calendar. So yeah, that's gaming the equities. That's exactly it. That's the right one. So sign up for that, and I'm going to post an announcement about that right now also. Okay, there's the announcement. What is the ad hoc NFP about? NFP. That was a pretty loaded question, Chris. So I do ad hocs. those are sessions I just add for fun, for additional knowledge, based on an event. So an ad hoc NFP is trading the reaction to the NFP numbers, which come out at 5:30 Pacific, 8:30 Eastern, 7:30 Central tomorrow morning. And so I'm going to do a live session around that announcement because I like to trade the extremes of those announcements. And so we'll do that. Those are pretty short and sweet. So that's what it is. Yeah, NFP is the non-farm payroll report, egg roll report. Yeah. It's the monthly employment situation, basically. We get weekly reports that people look at, but the monthly one is the one that the Fed uses to make its policy decisions, like lowering interest rates. So it along with FOMC are the big two things this week that everyone was watching. So, and this is important context. You know, the price action today is also going to respect that that's coming tomorrow morning. And so let's see if we can get another poke to the extremes and maybe play along again. Or it could, as I said, we could go double the distance we've gone today down, and that wouldn't be extraordinary or very extreme. And so, you know, another 3%. Let's even just getting to SD4 would only be 53.30. That's, you know, only 110 more points down, and we're down 150. That's not unlikely at all. It's not likely, but it's not unlikely. And this is the important thing about statistics to learn. Statistics don't tell you if something's going to happen or not. They tell you how to think in bets. And that's all you can do. And if you do that well over time, that's your edge. Ooh, this could be long again right here on this 50. I'm going to nibble right there just for fun. But again, I think it could go lower. So I'm going to try to play the 47.5 quarter number and the 45 quarter number. But I don't know that we will get down there. Maybe we will. There we go. Let's scale this a bit. And then we'll take it off at 52 and 50 for the first couple. We'll take 2 of the 4 off, and maybe, again, it could be an epic short squeeze here. So I'm kind of trying to get positioned for it. See how hard it is to fill this third one. And that's telling me there's buyers down here also, or this fifth one rather, not this third one. See how that I couldn't get a fill there. It traded down there, but I didn't fill. It traded at my price even. Let's see if it does this time. So that's what I'm watching right here. My order, it's trading there, but I'm not getting filled. Let's reset that volume so we can see a new picture. That's why it's nice having multiple columns of volume. I just reset this one that's got the highlights on it. That's called the current volume. Okay, see, I still haven't filled here at 47.5, the next quarter number. So it's working 47.5 to 50. There's my 50 exit on the first one. Let's take one more off there, and then we'll have 2 left. So, and then maybe put another target up there, get in line just below those guys. Let's see if we can scale this up a little more as it comes down. If it comes down, here it goes. See if that fills this time. And then again, we want to be in line down here at the next quarter number also, which is 45. And you can even argue to get in line down here, you know, at 42.5, where there's a bunch of people in line there too, see? So this gets a nice tail on it. We will trade all the way down there in a second. We're at the bottom of value here. This is the value area low. This is not extreme at all, but it's a tradable spot. It's a half a whole number. We've already come down quite a bit. We're going into the close. We're short squeeze potential coming up. Those are all good reasons to try to play long. Okay, let's get this other one off here. The second of 3. We'll take off right there, and then see if we can get a little runner on the next one. 2 left. There we go. There's a runner. Let's get under that. Cancel that. Now we've got a nice protected 2 lot. We'll protect both of them, but we'll do it separately. There you go. Good tactics. One's more risky. We'll take it quickly. The other one, I'm going to let it fall back a little bit. I'm going to hide under the liquidity. This one, I'm going to push up a little bit slower. This one I'm going to push a little faster, see? So I'm not going to use them together. We have two left. This could be $1,000 trade. In fact, this might just be. We're at 500 right now. So this one's probably going to get hit pretty soon. So let's let it hit. There we go. Okay, now protect the rest of it. 52, the 52.5 quarter numbers in place. So is this high volume node. And we got hit on the second one. There you go. There's another one. I would err on the side of playing long at this point, watching the price action here. We've basically stopped going down aggressively. So the shorts are going to have to start thinking about if time to cover. And that's what's happening. Are we going to stay till 130 for Apple? No, we're not. Sorry. I'm not enough of an Apple fanboy anymore for that. I used to trade options against Apple earnings. I did that for like 15 years, Cal. And you and I could talk about that. That's actually a fairly profitable thing if you know how to do it. I know a lot of people that do it because, it tends to, they had a habit of beating forever. And so you could always play around that. But lately I'm totally focused on, when you have action like this, why play it when it's less predictable when earnings are coming out? Right now it's the most predictable. So we'll wrap up just after the top of the hour today. But it'll be worth watching just for fun what it does do when those earnings come out. And it's not just that, there's a bunch of stuff. Here, let's put up the calendar. We've got a really busy day for earnings. So, who are the players today? Johnny, tell us who's playing after these friggin' ads go away. Okay, we have Amazon, we have Apple. 4 o'clock for Amazon, right on the close. 4:30 for Apple, 4 o'clock for Intel, right on the close. Coinbase 410, Roku 405, Block 410, DraftKings 415, Snap 410, Marathon 405. Let's see, Cloudflare 415. DoorDash 405, GoDaddy 405, Rocket 405. Oh gosh, this is just going to be a total party. Look at all. So it keeps going. There's dozens of them. This is just going to be totally crazy. So, there's a short squeeze going that I'm not in. Darn it. Oh well. Shoulda, coulda, woulda. See what I mean? It's just epic short squeeze country here. I'm going to cancel my orders and yeah, again, if you can find a good place to get long, you should be doing that, as I showed you a few times already here. Let's see if we can find one. Go down where the liquidity is, go down to the nearest quarter number, 57.5, go down to the quarter number before that. It's trading the 60, try to get underneath it and see if the buyers, we're at the edge of the range, see if the buyers take their foot off the gas, the sellers take over, maybe we can get a fill, maybe down here. Again, it's a big down day, so we should be able to get a pullback long going here. There we go. Okay, we've got one there at 57.75. It's already winning. See if we can get another one on right there. There we go. Now we got two at 58. That should go up to about 60 at least, maybe a lot farther, but there's a high volume node there. See if we can scale this a little bit. Again, this is risky because the low is pretty far away, but this time of the day, we should be able to play this fairly safely if we pay attention to the range and what's happening in the order flow, which right now is favoring short squeezes like this one. So take one off, protect the other one, and we'll see if we can catch another rip up. If not, we'll take profit, another $100. Wash, rinse, repeat, just like it says on the shampoo bottle. Any questions? That's how you do it. Again, we're going this way. We're going up here. We need to get another one long. There we go. There's two. Let's park another target up there. See if we can get a little more further down. High volume node, traded volume. That's what we're looking for to buy a pullback of. We're at the edge of the range. Does the range hold or does it retest the low? Good question. Don't know. Watch the tick. See what it's doing. It's positive, so we're probably going up. There we go. Let's get one of these off. Let's get, I don't want that one off. Let's try to protect this one and see if we can get a runner again with a short squeeze like that. And there's another 6 ticks. If we can get long again on a pullback here, we'll try. Struggling to pull back, so we'll hit the market, hit the bid. Now we got 3, now we got 4. Nah, do we have 4? No, we only have 3. That one didn't fill. Okay, let's take some of this off going this way. And then we can protect it again. And this one could be our big winner. You know what? Let's leave this one on and let's not protect it. Let's just let this rip if we can. Maybe up to 61 or 62. That's another 500 on this last one. And I'll try to buy it down here again if it gets down into 52.5 area where this liquidity is. But we won't use a target on this last one, just in case we get a good short squeeze. I mean, even just up to this, God, and we're nowhere near the VWAP. It's thousands to the VWAP on a one lot. So that's, I doubt we'll get all the way to the VWAP, but half the distance is a good possibility going into the close. But again, earnings could change that. Now I've got a 3 lot, so I can scale in and out a little bit. Now I've got a 4 lot. Perfect. So we'll throw a few targets up. Now we've got a 5 lot. Again, if it goes much lower, it shouldn't go below this high volume node, but it might. You know, again, we could see it a lot lower. So just trade what you're getting. There we go. Can I take some of this off profitably? That's the idea. We'll do it quickly always, particularly when you're going against a trend day that's been going down all day. Okay, now we've got 3 profitable. Let's try to get another one off here and maybe keep 2 this time. Come on, you can do it. Okay, now we'll get under these guys. Nope. All right, I tried to protect both of them, and they both got hit with 5 ticks. So boring. That's another $200. What can I do? Anyway. Still like this spot, 50 is definitely in play. Big high volume node, but we could go so much lower. You don't unequivocally, scale. You have to watch what the liquidity is doing. That's the spots to scale. The intersection of the price action, the liquidity, the traded volume, and the short-term range. That's it. And again, I'm not long, and we're probably going to get another short squeeze started here, and there it goes. You can see those coming. I mean, it's like clockwork. Just watch the bid. It's a relentless bid. We're probably coming up to at least 60 here. That was the one I was trying to catch. Oh well, we caught some of it. You're fine, Donna. Don't worry about it. Okay, so now we're turning kind of blue up here. We might be ready to really attack, but again, I don't, getting along really heavily here, where are you wrong? Below. You got to find some liquidity to lean on if you're going to try to do that again, and you want to take profits each time. So here's the liquidity down 53 to 55 quarter numbers, but it's, it's pushing up and there's a short squeeze going. You never chase those. You got to get in somewhere that makes some sense. The top of the volume here where all this liquidity is parked, maybe they're going to move around, but that spot was in play, particularly we're at the top of the range again. So, the really good spot was where I was doing it before down here, but I've already taken profits off of that several times. So these are all places I would play right around there. See, that's a quarter number. It's a high volume node. There's liquidity there. Same thing down here. So we'll leave a bunch of orders so you can see good places to get long, which is not where we are right now. It's just you're setting yourself up for too much risk, even though the potential is enormous. You can't manage the trade. You're at the wrong end of the range. That's why the LRC is so useful. Okay, now it's getting more interesting as it pulls back a little bit here. We're in the middle of the range at least, and I couldn't even get filled there. So still a bias on the long side. See what I mean? It's hard to get filled. That means everybody's doing it, which means it's going to keep going this way, up. So where can we get long? 57.5 is the quarter number. It's the high volume node. That's risky, but so far it's held. Let's reset the volume so we can watch it. So, if the tick really got crazy high, I would just hit the market, and it almost did there. Gosh, I cannot get a fill here. Okay, I just chased it to 60. Let's see if and there it goes. Wow. So there's the short squeeze going, guys. This is what they look like. I chased that by 4 points to get along, and I'm still up by 8 ticks. You see what I mean? So, try to buy pullbacks or just join the energy when it's that strong. And that's why I've got the tick here and the tick of the NASDAQ and the S&P, which is actually the ES, but this broader market one and the ES are the two I'm watching. Okay, we just picked up another long here. See if we can buy the 57.5 quarter number. I've got 2 now there, now 3. So let's try to get out of a couple between here and 60, and then maybe we'll get another runner. That's the plan. Always take profits quick and protect your profits. So again, if we can get under this, we're in good shape. Liquidity's all the way up there. We'll leave this last one on and try to scale into it a little bit more. And again, we're targeting all the way up there at least. Now we've got 3, so we can play a little bit more aggressively. Again, so we don't need that. See if we can get another one down here. Maybe onto this high volume node. Now we have 4, perfect. Take profits. 1 off, 2 off at the 57.5 quarter number. We're buying 55.5 now. We still have 3. We'll try to get out of 2. We're going to buy another one right there if we can. Can't fill it. That's a good sign that this one's going to get hit. And there it goes. See how I'm reading that? Let's get out of this one. Let's protect this last one, and we'll get a runner or not. Nope, we'll get 8 ticks. That's fine. Always take those. Because if it reverses and goes down here, you're screwed. You got to keep taking profits. That's the key to the game. Okay. Oh, that's funny, Cal. Oh. So, are there questions about this? This is a really simple technique if you just practice. What matters? Liquidity, quarter numbers, short-term range, what the equities are doing as a filter of which way you should be going. Right now, up is easier than down for all the reasons I've mentioned 5 times. In the middle of the day, down was much easier than up because it was a trend down day. That's changed completely. This is no longer a trend down day. We're not even trending down anymore. Look at, guess what? There's no trend. Look at my trend indicators. There's no uptrend, there's no downtrend. We are ebb and flow at the low, trendless. That's why that indicator is kind of cool. It measures the trends separately. That's that one I shared with you guys yesterday. It's called RWI, and the code for it is on the Investors RT site. I shared that link yesterday also. And this is it encoded in TOS, and you're welcome to it. I shared the link for that yesterday also. I coded it up with some other people 2 decades ago. Okay, so meanwhile, we don't have any more trades happening. We're kind of in the middle of the middle now. So we want to be either lower down or have more momentum to join. And we don't have either right now. So we're sitting on our hands waiting for more opportunity. You can see where my orders are parked. Those are all places I would trade. They're places that have a specific reason. They're quarter numbers, they're at liquidity, they're on high volume nodes, or all 3. That might change as we get to them, in which case I might move or cancel them, which you've seen me do. That is how you do this. The bottom of the hour is coming up and we're still going up. We're still short squeezing. You definitely want to be playing on the long side here. Shorts are very dangerous right now. Everybody short has to buy their contracts back. And when they start doing it, everybody selling says, oh, I don't need to sell right here. And they jump out of the way and we just rip up, a quick 8 ticks, 10 ticks. We've seen it now, 4 or 5 times just in this session alone. That's why I posted what I did in the pit about this session. Short squeezes aren't likely on a day like this. They're inevitable. And why is that? Because there's so many people short. They have to buy them back. It's that simple. Very few futures traders take home a position. The only significant exception to that are people hedging large equity portfolios because they're hedging. They're not speculating with that contract. So it's part of another trade. But the people that speculate, which is what we do, don't go home with positions. It's too dangerous in futures. You can trade overnight if you want. You can trade regular trading hours if you want, but you don't keep like future swing trades on. That's just not a thing. There's much better ways to manage the risk of swing trades. But intraday, it's the holy grail because the leverage and the transparency of the market, the order flow is perfect because there's only one market and you're literally seeing every trade. There's just no other market on the planet that does that. This needs to get centered over here. Sorry, this got off-centered. There we go. Now we can see that a little better. Okay. So we have price rejectors at the bottom of the recent rotations, but not the 30-minute rotation. The last couple of 5-minute rotations had price rejectors, which were ultimately short squeezes. But now it's kind of consolidating here, so I wouldn't necessarily be long either. But if I had a position, I would be long. I wouldn't want to be right now. I'd be flat, which I am. You're seeing that. I'm kind of now. There's another short squeeze. So again, if you're going to do anything, be long and just enjoy the short squeeze ride. Remember what I said about half the distance to the goal line. That's an Americanism in football for this setup. If we get this far away from the VWAP, typically we'll get at least halfway back to it. So, and we're doing it right now. Look at that. The VWAP for the RTH is at 20, 55.20. We got to 55.50 on the downs, 54.50. So half the distance back would be, let's see, 70, call it 35, call it 95, and we're at 65. So 30 more points would be roughly half the distance back. So a lot of potential in a squeeze, in other words, but you got to get an entry at a spot that you can justify, where there's liquidity, where there's traded volume, where there's a high volume node, and that's not easy in these conditions. It's moving around a lot. But boy, the tick value of ES really makes it lucrative to do it. All righty then, he said. C'est la vie, said the old folks. It only goes to show you never can tell. Okay, so you see where my orders are. I'm marking that. I'm going to cancel those orders for now, and I'm going to switch back to a different account, this Apex that I'm playing. This is a 150 that I bought yesterday that I have. It's a little less than halfway there. I'm testing their data feed again, and you can see this is the results in that account today, $1,600 P&L. So I guess we're almost at, yeah, we're like a third of the way there in a day and then change. So that's just using this. In this account, I'm only using the technique that I've been showing you yesterday and today. That's all I'm doing. So with the coaching group, I'm running another little contest to see who can get funded using that technique, the cleanest, for gift cards. My last contest didn't work out very well. Everybody cheated. So anyway, questions, comments. We're going into the bottom of the hour. Let's see if it can reassert to the downside. Lee's statistic did play out during M period, which is just ending right now. Actually before M period, but the idea is by M period that it will do it, and often during M period, but I'll let him tell you more about that. Very interesting. Again, statistics like that for structural trades, if you trade the statistic, it's golden. You just have to take every one of them. That's the problem with that kind of a setup. If there's a 70% chance of something happening, you have to take every instance of that thing happening, and then 70% of the time you'll win if you do it right. That's how an edge works. And if you're not winning, you have to evaluate, are you executing wrong, or is the edge wrong, or both? Usually it's a little bit of both, and you constantly improve both. You improve your edge, and that gets hard to do after a while. My edge is pretty much my edge, so it's always about executing better, and that's why I just constantly practice, and that's why I'm a broken record about that topic. You get good at trading like this by practicing. There's no magic. There's no indicator you can buy. There's no computer. There's no mentor. It's about learning the right way to do it. Let the market guide you, and practice over and over and over and over. And when you're done doing that, practice some more. It's for the, oh, you know what? This is I haven't shown this to this class yet. Here's a good thing that's in the pit. If you go to the process stream, there's an item about practice, and this is really true. Should you be practicing right now? Yeah, that's what I was talking about, Cal. I didn't make the rules and the contest objectives clear enough last time. This time it's for the coaching group. What we're doing is 150 or 250,000 or 300. Pick any big eval and use this technique and pass it with consistency so that Apex will be happy with you. And the winner of that, and if all five of you do it, I'll give all five of you gift cards. This is such a simple technique to execute on if you don't overthink it. You just pay attention to those things. What are those things? The liquidity, the recent traded volume, how it's reacting to the price, and then where we are relative to value. And then, the short-term range. Those are all you have to worry about. And then you just execute, and that just takes practice. And you get good at it by being bad at it over and over again. And it's like anything else, that movie about Vanessa and Serena Williams' dad, King Richard. That's a great movie that's out on streaming right now. It's been in the theaters, just about his relentless plan to make them, what they are today. And just, it was decades of practice. Look at Formula One drivers. Lewis Hamilton started driving when he was 6 in karts. Max Verstappen was 5. Verstappen's in his 20s now, and he's a three-time world champion. Hamilton's a 7-time world champion in his 30s. This is all they've done is practice one thing and be the best in the world at it. If you want to trade futures for a living, you have to understand it's the ultimate meritocracy. Everybody here has some advantage over you, either more money or more experience or more knowledge or whatever. And so you have to be ruthless to trading your edge your way with your general management techniques, your tactics, your execution. And the only way you get good at that is by practicing it and having people coach you that help you practice the right things. Yes, that's a thing. But there's no magic, guru that's going to say, here's all you do, buy my $10,000 indicator and come in my trading room. Guess what? That's nonsense. You have to do it yourself, and it takes practice. But boy, is the opportunity. I mean, it's unlike anything else. There's no other business like this where you can come in with $5,000 and make a living. But you're not going to do that in year 1 or year 2 or year 3 or year 4. You might do it in year 5. And then after that, once you know how to do it, the sky's the limit. That's the beauty of this business. There's always money available if you trade well. You can get other people's money and get a percentage of that money and a percentage of the profits to trade it. Particularly if you're young and you can prove yourself over a couple of decades, then the world is your oyster in this financial space in the futures markets. But it's totally a meritocracy, and the vast majority of people fail. depending on who you talk to, it's somewhere between 95 and 99% of accounts lose money. Real money accounts out there. And that's true. I mean, I've seen that for 50 years. Really smart people losing millions of dollars, really stupid people making millions of dollars. How did they do it? Because they just follow a process and they don't think about it. And that makes them smarter than the smart people who spend too much time trying to figure out what's going to happen next instead of just trading what's happening right now. So that's the moral of the story. Next thing up is the 10-minute wiggle today. I'm struggling to find good trades right now. We're working a relatively large range in a huge range day. Remember dynamic ranges, and it's orderly to the upside, but only if you're in it at the right spots. And I wouldn't just be unequivocally long here. We may not be done going down, and you never know where the sellers might reassert. So you really got to watch the liquidity and traded volume. And right now it's really indecisive. Look, there's a big negative delta there and a big positive delta there. You don't normally see a big positive delta this low down in the price. You normally this close to the bottom of the profile, that all the big deltas should be negative. So that's very offsides. But that could be somebody on a different time frame. It could be somebody hedging. It might have nothing to do with the trade today. That's why you don't just look at any one big delta. Somebody asked me about that in the last couple of days. A couple of different people asked me about that. It's curious, but it's not like, oh my God, sell there because somebody is on the ask with 1,500 contracts. No, that they traded there, yes, and it may or may not mean anything. You never know, but it's worth just being aware of it. Yeah, can't I just buy a bot? Exactly. There's so many bot salesmen right now. And again, for certain things, bots are appropriate. But a bot isn't going to just trade for you and make money. Otherwise, why would somebody sell it? They would just use it. That guy, E-Mini Vinny, is in court for fraud now after 5 years of showing bullshit on Twitter to hundreds of thousands of sheep, paying him lots of money. Mind-boggling. You see that over and over again. Those guys, every year there's a new one of those guys, those Furu people. And it gets comical after a while, but that's the nature. Humans want a quick, easy solution, get rich quick without any work. And so you can sell it to them anytime. You just have to make it look like it works. That's why we're not doing that here. We're just showing you how you actually trade the auction as the auction goes at different times of the day based on the traded volume and the liquidity. The liquidity is what people say they're going to do, and that's important. But what's more important is what they actually do, which is the traded volume and how the price responds to it as it's happening. That's all there is to it. So, questions, comments, put them in the chat. I will address them. Tomorrow is our last session. And as I said, Lee will join us as a guest, and it's the regular TRG session extended by half an hour. So we'll start at 11:30 my time, and 1:30 Central, 2:30 Eastern. And we'll go a little longer than normal for all the TRG people, and we'll blend in with the class. So, and I'll review what we've talked about for the last 2 weeks. But today, from here, look where we are right now. Look at ES and NQ. They're both at SD -1. That's the right here. Okay. So, and that's value. That basically is saying, here's the VWAP. That's the value based on using the volume weighted average price, which is a decent way of finding what value is. Okay. And it's been coming down all day. We see that. And this represents the one standard deviation either way. And that basically constitutes, again, roughly 66 to 70% of the volume. So that is most of it. So, this could be as far as we bounce. That could be it. The market has returned to value. So it's not quite half the distance to the goal line because the goal line's coming down, but it's pretty close. So there's that setup again. Whenever you have an extreme down day or an extreme up day, this is a really good little kind of rule of thumb. Again, it's a kind of a fine-tuning piece of detail on the extreme setups. Assuming you get down to somewhere around SD2, which we're doing here, And, if you say, okay, that's as low as we got, and the VWAP is up there right now, there it is. Okay. So off the low, we should get roughly halfway. And, that's what you look for. But we could go lower. It would be a better setup here to get to where we almost are. But the setup is in play because we have enough. We're more than 30 points away from the VWAP, but now we're not. Now we're actually almost right there. So that's how you do this. It's more than 30. Look for that. Look for a place to do it. Watch the order flow for good entry points because you still need a good entry, even if the idea ultimately works. That's another common mistake of new traders. Well, it got to my level ultimately. Yeah, well, if it gets to all levels ultimately, you got to be able to manage risk along the way, or what difference does it make? So we're going down a little bit now again. See, we're pushing the bottom of the range. So this is behavior to pay attention to. That upward motion is no longer. Now we have down momentum again. Let's see how far this down momentum can take us, right? That's what we're interested in. We'll zoom in a little bit on it on both sides. And we're going into the 10-minute wiggle in a little bit. So maybe we'll push down, and that would be an ideal place for a long if we can get to ST2 or ST3. Again, particularly since it's further down now, right? It'll make a lower low, and if we can hold that spot, there is a price rejector on the current period at the low. That's a really obvious pattern. Exhaustion and absorption at the same time. That's a price rejector. So, but again, that doesn't mean we're done going down. I'm looking at the session on one of my vertical monitors, and there's a price rejector at the bottom of the session too, as also, but it's really hard to hear. I can't spread this out on this monitor because it's configured for a vertical monitor, but if you look at that, you'll see that that is a true statement. So it's kind of an interesting spot to be long, but not, at all costs. We're at the bottom of the range now. Let's see if it can find a quarter number and liquidity. Maybe here. Boy, that's really broken up now. There's the high volume node, but it's further down. There's no really good spots until we get much closer to the low, like that one. Good absorption, exhaustion, a high volume node, and a decent little tail, but a tail could be longer. So yeah, we may just dribble our way into a close at ebb and flow at the low. That's not uncommon on a trend day. You get some of the way back toward the VWAP, toward value, and everyone kind of covers at a leisurely pace. That could be what we're seeing here. Let's see how far down it can get pushed. Unless we get a lot lower down, it's just not worth the risk of trying to scalp this without playing at the liquidity. And the liquidity is moving around. Nobody's committing. See what I mean? The liquidity traded up here when we pushed up to 75. That liquidity traded. But now, see, they're moving. They're moving down as we come down. And that's what I did. I'd get out of the way. Lower down, like down here it traded. That's what, 60. So 60 is the first spot to really watch. And that's also the bottom of the range, not coincidentally, but it's not anywhere. Extreme would be more like 20. So we could easily find an air pocket and drop 40 points. That's what that's telling you. Which again is making risk management here really difficult, which is what trades. We had a bunch of really good ones a few minutes ago, and now the population of good ideas is getting small. Ebb and flow at the low, dangerous. It's not low enough, and we're not going up with any momentum. We're actually going down. So I got nothing here. Sit on hands until 10-minute wiggle and see if we get more opportunities. This could be it until the earnings, and that could be it for the session. So this might be it for today. Not far-fetched. So again, If you have questions, please put them in the chat. I hope you're enjoying the class. This is our second to the last day, and I think we're achieving our objective. I've been able to show you all of the setups I spoke about countless times. And I'm really glad we got one good trend day during the 2 weeks. I was hoping that would happen. I thought with all the economic numbers and earnings that it was likely. So that's why we scheduled this class for these 2 weeks. And I'm really happy with the way it worked out. So I hope you feel the same way as students and customers of the course. Tomorrow, as I said, I will review, and Lee will be here as a guest, and we'll have some fun with the Friday close, which could be wilder or just as wild. Again, NFP in the morning. Join us for that ad hoc. That's on the calendar, and we'll see how today wraps up. Another day in paradise of the markets. Can't ask for better action than this. Again, if the range is this big, if you get 800 points of NQ and 100 and what is it now? 156 points of 600 ticks of ES, there's got to be opportunities to make money there. If there isn't, you're looking in the wrong place. You're probably looking at indicators and not watching the order flow. Because today the order flow could not have been clearer. It's one of those days where it was just screaming, short the bounces, short the bounces, short. I mean, it was just so obvious to do that. And then now it's like, okay, we're done doing that. Let's see if we can squeeze some shorts. And the shorts are like, not so fast. So there's a little bit of a conversation going on and we're not going anywhere. That's what's happening. That's why we're in ebb and flow. If you think about it that way, it gets very easy to think about how to trade it. And here, don't. We need to be higher or lower before it gets interesting in any way. And it may not get any more interesting today. We might be done. You got to learn to accept that too. The market will give you what it gives you. It won't trade your plan. That's why trading plans are silly. Have an edge, execute your edge. Don't try to predict what's going to happen. Know what the artifacts are because they are relevant, but you don't trade the artifacts. You trade what's happening now. And the artifacts, we get to them or we don't. The inflection points are self-fulfilling. Any inflection point is both a long and a short, but there's almost always a better direction to play unless we're really range bound. So there's a quick summary. Questions or comments, put them in the chat. The puppy's parents came home last night, so I'm no longer on puppy watch today, so I'm going to get a little rest. That was a fun 3 days of dog sitting. Where do the symbols used in the quote board come from? Good question. This is the symbology for Denali through Sierra chart. That's this data feed that I'm on. And it's a CQG data feed and Denali at the Sierra chart end. So, for example, their symbol for ES is EP. I have no idea why, but that's, YM is YM, NQ is NQ, but for some, and RTY is RTY, but you can see if I pull out the whole symbol, yeah, ES is EP. And I don't know why, but thanks for bringing that up. I always forget to mention that. That's, I believe that's only on, that's the only platform I've seen that on. In most other platforms, it converts that, but if you're using a CQG feed or the Denali feed. Okay, we are about to 10-minute wiggle, and it's wiggling all right, but it's doing it both ways with a little bit of upward lean off of 60. We just cut a short squeeze a couple of seconds ago. You can see we're back on SD -1, which is pretty much value. So we're going to see a battle around here, but this air pocket up here, we could easily short squeeze into that and go to 80 very fast. In fact, we're doing it right now as I say that. So I'm going to continue to keep my hands warm and sit on. There it is. Short squeeze, watch the bid. That's all you need to do. And I think I'm done for the day. I'm A, tired, and B, I've had a great day across all the accounts. I've done well. And It's been a good teaching day too. Good session this morning. I hope this session was useful. It's still short squeezing, by the way. Look at the tick. If you have any questions, 700. That's a short squeeze. The broader market, everything is at the moment going up, or most big chunk of it. Put it that way. A short squeeze on that metric, the NYSE tick, is when we get above 500, that's pretty strong. That's it gets as high as 1500, but that's weak. Like this with tech is weak, but it's basically the top 2500 or so issues on the NYSE, which includes the S&P 500 and everything in the NASDAQ and a whole. So it's in the tick, and then I watch the tick of the S&P 500 and the tick of the NASDAQ 100, which are those two there. So that explains everything in the middle. The calendar, and I can also minimize that if I wanted to, but this keeps it front and center in my mind. That's why I do it that way. But the equities, I think we're going to get to 24-hour equity trading pretty soon. I've talked about this before. I don't think it's really far away, although a lot of people have said that for a while. Oh, wow, my data feed just disconnected. What's that about? We're still on the internet. I see you guys are still there. What happened? My data feed just went down. It's the Apex data feed. Let's see if it can reconnect. But it's not. I can connect to my other feed if I have to, but that's interesting. I just got done telling you guys the Apex feed was better. It's offline right now, at least at my end. All my other feeds are running. I'm still watching my data flowing here. That's the feed that we were just talking about, the CQG Denali feed. And but this one is on, the domes are on Apex's Rithmic when it's stopped right now. My other Rithmic is running, so I can switch to that. Those of you on Apex Rithmic, are you stopped also? Anybody? No, that's interesting. Okay. Yours is running. Yes. Okay. So mixed. Let's see if mine restarts. Meanwhile, I'm going to try to connect to the other one just so we have it ready to go. We might have to wrap up if we don't get data back, but that's okay. I wasn't going to do any more trades anyway. Come on, our trader. Let's get my other feed open. This is the advantage of having multiple feeds also. Apex went down. Okay, let's see if I can open my other one. Yep, my other one's connecting. Okay. Boy. Let's see if Apex reconnects. I'm connecting to my AMP feed now, so we will have data in a second, one way or another. But I may just wrap the session up if this continues. Okay, it's trying. Come on, guys. Okay, there we go. That's loading. Okay, so there's my other cache feed. And let's see if Apex comes online too. Meanwhile, we've got data. I'm going to go grab some more water while I'm waiting to see the results of this data snafu. Obviously, don't want to put trades on while data is flaky. That's a bad thing. And look at also, we're expanding the range here. See on the LRCs as it kind of figures out what it wants to do up here in the 70s. We talked about this a minute ago. Get some more water. All right, so final questions or comments from anybody? We got our 10-minute wiggle. We had some data silliness. All the food groups are working today. So I think I'm going to just wrap it right at the top of the hour here. I'm ready to take a break myself. So So do you have any questions for, tomorrow I'm going to do a review, and, I assume because everyone's quiet that they're learning a lot and they are enjoying the class. If you have um, anything else, please, reach out to me. I appreciate the feedback. Thank you, Chris. It's pretty much going to just fizzle here. I think that's pretty much in the cards. We're past the 10-minute wiggle, and price isn't really going anywhere. And we have lots of earnings coming up. It would be pretty stupid to initiate a position. I would think that most people who needed to cover have. Look at the cumulative delta is much higher than it was. It was down at -30. It's now -15. So it's pretty much, that's 1,000. So any urgency in the part of shorts to cover has probably been consumed by the market. So what other questions or comments? Remember, tomorrow we'll review, and I'll take whatever, I'll go through each of the setups again and the examples we talked about. But I'm, like I said, I'm really pleased. We've had some really good conditions for this particular class to have been scheduled now. It was serendipitous that those two occurred at the same time. Yeah, Oliver, it really is. It's about practice. And this is something people just don't grasp if you're, buying the normal financial education. The markets are not complicated. The way they trade is fairly simple. That doesn't mean it's easy to trade them. It's simple, but it takes practice. And if you think about any skill, name a skill that's worth doing, anything: woodworking, interior design, kayaking, mountaineering, Formula One racing, poker. Name anything. You don't get good at it instantly. You get good at it by practicing. And for some reason in trading, nobody ever talks about the fact that you need to practice. I mean, even over the weekend, I get crusty and Mondays are crappy. That's why we have the Ides of Monday. It just makes sense to recognize that you haven't traded for a day. And funny as that sounds, it gets stale. Your skills get stale, like they do in any skill. You have to keep your skills fresh. So, all right, we have a couple more minutes. Good comments, thank you. Again, if there's anything you'd like me to cover tomorrow, you can post it in our stream in the pit with a question, or something you want me to review. I think we've seen many good examples of all the setups: the extremes, the tight ranges, the range in NQ that has really clear boundaries in the traded volume, short squeezes. We definitely saw plenty of those. And we got a trend day, which was cool. We got a bunch of economic announcement days and the reactions to that. We had the end of the month and the window dressing that entailed yesterday. So I'm really I'm happy with that. We got a lot of different conditions to see examples, because that was the intention. And so the market cooperated from that point of view. So again, tomorrow we'll review. Tomorrow Lee will join us briefly to talk about some structural things around these ideas at the close, and we'll have seen NFP in the morning. So it'll be another great day. This has been one of the best weeks for trading we've had in several months. It's just been really, really good action, good ranges, lots of momentum. So don't overthink it. Just, what do you do well? What don't you do well? That's how you can coach yourself. Record your results and record your trades. And what were you doing at that spot? Were you doing the right things? Were you following the right process to take advantage of the information the market's giving you? We call that market generated information, not indicator generated information. But again, the liquidity in the order flow is real time. That's the market telling you what's happening. The auction is literally playing out in front of you. If you learn how to watch it, you will understand what places you have an edge and what places you don't. It's that simple. Let's see. I have to review all the classes to get one. Yeah, absolutely. And if you guys can do that before tomorrow, then any of the questions that come up, I can answer tomorrow. But I'll be happy. You have access to the stream for a long time, and we can answer them there. We don't close streams down after classes, so at least 90 days you'll have access to that in the library for at least 6 months, or as long as the library is there. We don't block access to old classes from people that took them. So, all right. We're about to wrap. It's about 30 seconds in. So hope you guys have a good Thursday evening. And tomorrow will be interesting. As I said, NFP will be the culmination of a very busy week and the beginning of a new month. And anything can happen. So I'm sure it will. What else can you say? Thank you, Peter. I really appreciate it. I thank you, Billy, you as well. I appreciate the feedback. All right, there's the bell. We are closing. We're settling right here around 80, which is not surprising. Again, it's been there for a while. So I will kill the share and I will see you guys tomorrow morning for NFP. Have a good evening.